Bloomberg Audio Studios. Podcasts, radio, news.
This is your weekly Washington Policy Pulse on the Balance of Power podcast. I'm Joe Mathieu. Every Monday, Bloomberg Intelligence senior policy analyst and friend of the show, Nathan Dean, shares his weekly call on upcoming catalysts in the nation's capital. Listen for the most recent and relevant policy research from our team at Bloomberg Intelligence. Now with today's installment, here's Nathan Dean.
Welcome to the Washington Policy Pulse. My name is Nathan Dean. I'm a senior policy analyst with Bloomberg Intelligence, and welcome to all of you who are coming to us via the Balance of Power podcast. We always appreciate you listening. We're recording this on October 13th, and so we do have fairly amount to talk about, a lot of talk about in terms of the government shutdown. Recently, over the weekend, we saw President Trump say and vow that he was going to pay military members on October 15th. As you recall, October 10th, this past Friday, was the first paycheck that government workers were going to miss. And we'd always said that, we think about the shutdown now that we're in the shutdown in terms of pressure points. And the next major pressure point was going to be October 15th. Now, if President Trump goes ahead and pays the military, that removes a pressure point. And honestly, it removes Congress from the situation and actually doesn't give Congress much in the way of an incentive to come together and negotiate. Also, over the weekend, we saw some polling data, and it really essentially is just the status quo. If you're a Democrat, you're feeling pretty good about your situation right now. Senator Chuck Schumer even said every day this gets better for us. I don't think he meant to say it that much, just in terms of how the Republicans used it against him. But, if you're a Democrat and you're looking at the polling data that suggests that about 2/3 of the independents out there blame the Republicans for this, you're thinking you're in a pretty good situation. If you're a Republican, you're looking at the polling data and it suggests that about 85-90% of your base is still with you. You're looking at the polling data and you're still in a good situation. So nothing has really changed, and as a result, this shutdown may last for a while. There has been some little thoughts that this could go all the way into November. In fact, according to Polymarket and some of the other prediction markets, this was originally going to be around 11 days. Then it turned to 18 days, and now there's quite a bit of folks that think this may go 35 days or longer, which would be the longest shutdown in U.S. history. So again, keep that in mind. There's no real pressure point here right now for this week. President Trump is in Israel and Egypt. He's returning tonight. He should be landing around just after midnight Eastern time. But the House Republicans are still not here. The Senate isn't really seeing much negotiations going on, and I'm not really thinking that we're going to see much happening within the next 2 to 3 days, especially if those troops are paid. We also saw about 4,000 government workers over the weekend, or starting on Friday afternoon, receive reduction in force notices. That really doesn't change the calculation either. If the Democrats, from the Democratic perspective, they look at this and they say, you know what, this just proves our point why we shouldn't negotiate. So I do think that if there is going to be a solution, it's going to come from a bipartisan group of senators. They will actually create this solution on their own. They will then present it to to leadership. I was looking at some earning calls. That's why I said management. They'll present it to leadership, and then ultimately that's where the deal will come from. But I'm not seeing where the next pressure point is anytime soon. If there is one, it's going to be towards the end of the month when SNAP benefits run out, or SNAP benefits, there's some discussion of whether or not they'll actually be there from November. This is the Supplemental Nutritional Assistance Program, also known as food stamps. This has been allocated for October. It has not been allocated for November. In fact, the White House and the executive branch put out some notices last week that this could be at risk. And so if we get into a situation where later in the month this government shutdown hasn't been resolved, you could see some headline risk associated to those grocery stores. So again, that's, I think, the next major pressure point, because as of my last count, there's about 42 million Americans that rely upon food stamps for their consumer goods purchases. So we'll just see what happens. Let's talk about tariffs for a little bit. Now, President Trump just last week threatened 100% tariffs or more on China in relation to rare earth minerals. This would go into effect in November. We view this essentially as let's wait and see what actually happens here, because over the weekend, President Trump and the executive branch and Treasury specifically made a couple of comments that would be opening the door to China for further negotiations. We had a little quick huddle in terms of how should we respond in terms of Bloomberg Intelligence. Should we look at this in greater detail? And we essentially just said, let's wait for more information before we get really excited about this, because as you've seen many, many times in the past, President Trump makes a statement, There's a headline reaction to it, and then subsequently President Trump either further negotiates or something's pulled back. There was a question that we had from a client on whether or not this would be an IEEPA tariff or this would be a Section 232 tariff. Our general thought at the point is that because it's rare earth minerals, there was an investigation launched in April on that most likely this would be considered a Section 232 or maybe a Section 301 tariff. I can't remember off the top of my head, but it's one of the section tariffs, which means it's an investigation as opposed to IEEPA, which means that it's not going to be, deemed by, it's not going to come up in this court case that's going on through the courts in terms of challenging IEEPA. Another tariff that you should be aware of, this one goes into effect at 12:01 tomorrow morning. This is on furniture and cabinets. So just real quickly, in terms of softwood lumber, you're looking at a 10% tariff. In terms of upholstered wooden products, you're looking at a 25% tariff tomorrow, and then a 30% tariff on January 1st. And then in terms of kitchen and bath cabinets, which is great because I have to remodel my kitchen next year, you're looking at a 25% tariff today up to a 50% tariff on January 1st. So again, keep those minds. Most likely, our colleague Drew Renning is looking at this. We have a couple of other analysts who are looking at it. So if you have any specific questions in that space, just let me know. I'll put you in touch with them. A couple of others, just things to keep in mind, keep your eyes on this week. Treasury Secretary Scott Bessent last week said that, he made a comment about deposit insurance. We've talked about this in the past on this call. There's this idea that deposit insurance, which is currently at $250,000, would be increased for business transaction accounts, aka small businesses. Now, there is legislation that's coming forth from Senator Hagerty and Senator also Brooks, so bipartisan, Republican, then a Democrat, that would raise it to $20 million for business transaction accounts. Now, there was some bipartisan agreement or bipartisan warmth to this idea in a recent Senate Banking Committee hearing, and Treasury Secretary Scott Bessent, real joke, I've gotten in trouble before when I'll just say on media, so it's like Scott Bessent or at Bessent. So that's why I always say Treasury Secretary Scott Bessent. So anyway, that's why the label always comes up first, because I want to make sure that I'm adhering to the proper protocol. So Treasury Secretary Scott Bessent said that essentially that he wants to see a markup, and he thinks that the Senate Banking Committee is going to have a markup on this bill fairly soon. Obviously, you'd have to wait until after, I think, a lot of the shutdown politics are at play, but this is something to keep an eye on, because who pays the increase in deposit insurance? It's the big banks, JPMorgan, Bank of America, Citigroup. So let's just keep that in mind. I'm going to put that back in my pocket, and we're going to keep an eye on that. Also sticking around in the banking sector, I put out a small note last week looking at the Fifth Third Comerica merger. Essentially, the long story short here is that I don't see any reason why the federal regulators would actually oppose this. From an asset perspective, you're looking at $289 billion in assets, which is well below the GSIB threshold of $750 billion. Doesn't even put it close to like PNC or Capital One, so that's not really an issue. And if there is any specific issue related to deposit bases or branches, I think Fifth Third can easily resolve that just by changing a couple of things. Also things to keep an eye on, this is IMF World Bank Week, so you're going to see a lot of speeches from various policymakers and central bankers across the globe. Vice Chair Michelle Bowman, for those of us who care about the regulatory space, actually has two speeches this week. One is at the IMF World Bank. I don't think that's going to have a ton of regulations on it, but she's also giving a speech later this week in terms of stress testing. So if you're interested in bank stress testing, and we've been waiting for a second stress testing proposal, it was originally supposed to be out by September 30th. So we're waiting for this other proposal to come out. So I'm curious to see what she's going to say about that. So I'm going to put that in my calendar to watch. And then this is also DC FinTech Week. This is actually a really great conference in terms of financial technology and crypto. A lot of policymakers are going to be talking about that. I actually have my state of play on stablecoins, what it would happen, the implementation of the Genius Act, if you will. That's coming out tomorrow. So if you do want to see a copy of that, please let me know. But look for a little bit of crypto news this week. There are a couple of folks saying that Mike Selig is going to be nominated for the next Commodity Futures Trading Commission chair. Mike is a senior advisor over at the SEC at the moment. He knows crypto. He knows crypto. He knows how the CFTC and the SEC work. So I think he actually would be a very effective pick for the crypto sector. So again, keep that in mind. And then the last thing I want to talk about is this idea of farmer aid. Now, last week we were anticipating that Treasury Secretary Scott Bessent, again with the title, was going to release somewhere between $10 to $13 billion in aid for farmers. Now, I had a conversation on Friday with our ag analyst, Alexis Maxwell, and this is one of the things we've been doing is every Friday I put out a conversation with an analyst that I think is writing about Washington, and it's writing about something that's fun about Washington and important, and I put it on the terminal. Now, it's only on the terminal for now, but in this past Friday, I took Alexis through this scenario of, okay, what happens if we get $10 to $13 billion in terms of farmer aid? Some Republicans have said we can even go up to $50 billion. But if we get 10 to 13 billion, essentially what happens, and she said, look, it's mostly going to be buying things like fertilizer, not any capital spend, but more of just products and goods that will assist with the harvest. So most of that money will be spent in the fourth quarter. And then by this time next year, we'll be in a situation where probably nothing has really changed. So if you're in the ag space, just please let me know. I'll give you a copy of that presentation to you. So with that, I'm going to say thank you very much for your time. We really appreciate you joining us as always. Have a wonderful week, and we'll talk soon.
Our thanks to Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, bringing you the latest installment of his weekly Washington Policy Pulse. For more from BI or to join this call live each week, you can email Nathan at ndean@bloomberg.net. That's NDEAN@bloomberg.net. And come back to the podcast later today for the latest edition of Balance of Power.